Hello and welcome to the Crypto Masters Podcast, helping the general public to master an understanding of crypto assets. My name is Brian McCoy.
And my name is Ross Eaton.
And we are the Crypto Masters. All right, let's get started. Our goal here is to provide information about crypto assets to help the public to make investment decisions in the crypto space. We don't try to predict short-term price movements, so this show is not for short-term traders.
And we provide information about different crypto assets to allow you, the listener, to make your own investment decisions. And big disclaimer here, this is not financial advice.
Not financial advice. All right, let's give our listeners a brief summary of our backgrounds because we bring different experiences and skill sets into the crypto world. My background is in law. I've been a practicing lawyer for many years and also as a hedge fund manager. I've co-managed a Frontiers Markets hedge fund for almost 20 years. So my background is in investing and in equities.
Very exciting, Brian. And I have a degree in computer science. I've been in software development roles, IT roles for about 6 years now, currently a data analyst. So I'm kind of bringing that technical aspect to this Crypto Masters approach. And, hopefully in the future, I'll have some blockchain and smart contract development experience to share with everyone here.
And Ross, I think we probably should add now that we both now have years of experience investing in crypto assets. You've done some mining of different cryptos. So we're not newbies to the crypto space either.
Yes. We're definitely investing in crypto and currently have some.
Yeah. Okay, so those are our different backgrounds and skill sets, and we hope that combination can be useful. This is a redo of our first show. We weren't happy with the sound quality, and we just wanted to redo it. It's on Bitcoin, obviously, the obvious place to begin. So we're starting off with Bitcoin.
Yeah, someone didn't know how to work audio equipment, camera, lighting, stuff like that. That someone was me. So it's gotten better.
Yeah, you just, we started out from you had to do a first show and that was it. And so we just weren't happy with it. And let's get started with redoing it. We got a lot of ground to cover. We'll go ahead and jump in. Just as another disclaimer, we can't possibly cover all of the information about Bitcoin in one podcast. We're going to try to cover what we think are the important aspects of Bitcoin and blockchain.
Let's do it, Brian.
All right. I'll get started with a little bit of background on Bitcoin, and then Ross, you jump in with more of the technical aspects and the mining aspects. Bitcoin began in November of 2008 when a person named Satoshi Nakamoto released a white paper titled Bitcoin, a peer-to-peer electronic cash system, describing a new digital currency. Now, Satoshi Nakamoto was not this person's real name. The true identity remains unknown, and as I've said, is truly one of the great mysteries of our time.
Poetic, Brian. Poetic.
Someone who came up with such a important change to the way things were done, and no one knows his real identity. That is really interesting. In January of 2009, the code was released and the first Bitcoins were mined. So this digital currency was designed to correct some of the problems that attempted digital currencies had incurred before Bitcoin. Bitcoin wasn't the first attempt, but it was really the first successful attempt. Mm-hmm. And it allows Bitcoin currency to be transferred between parties without a trusted intermediary such as a central bank or a more normal bank.
Absolutely. And that is a perfect segue, Brian, into this next point, which is decentralization. This is the main feature of Bitcoin. It's extremely important. And that means, kind of as Brian said, there's no one government company, person, entity, organization that controls Bitcoin. It's done by the public, and anyone can participate, and that means you and us,
Yes.
which we do.
So you mentioned the decentralization. That's one thing we get across here in this first episode. It is that decentralization is a key aspect of crypto.
Yeah, and that's something we bring up every time we bring up a new crypto asset is it decentralized, and how decentralized is it? That we see that as a huge benefit and something we like to see in projects.
All right, Ross, why don't you start us off about blockchain, another important concept that Bitcoin started.
Yeah, blockchain. It's a hot word right now in Bitcoin. No, it's the main feature. It's another main feature. Decentralization and blockchain goes hand in hand, and most people have heard of blockchain. And Bitcoin is really the first real world application of it. It's essentially a data structure, just to kind of generalize that out there. But Bitcoin blockchain is a public ledger, and that means that all Bitcoin transactions are available to the public. Encryption and private keys are used, so you can see transactions, but it doesn't say, Ross sent 1 Bitcoin to Brian. That's kind of hidden in layers of encryption and using private keys and stuff like that. And we'll touch on that a little bit later. But all transactions are public, which is thousands of copies of the same program. Wait, let me back up here. But all transactions are published on the blockchain. I read published as public. So all transactions are published on the blockchain, and that's just confirming all the transactions. And this is why it's decentralized. Instead of a single entity like a bank keeping track of the transactions, it's the members of the Bitcoin community. And anyone can be a member by downloading the software and participating as a node operator. And this is where, we want to make the distinction between a node operator is different from a miner. A node operator really just confirms the transactions, where a miner processes those transactions.
You'll mention a little bit more about mining, I think, later.
Yep, mining comes up in a little bit.
Okay.
But yeah, this community participation is also a main aspect of the security of the system, because the community verifies thousands of copies of transactions if something doesn't match, like a attempted fraudulent transaction. So I could try to fake that, Brian sent me 3 Bitcoin, and, a node operator would say, that's not matching up here. So that's just rejected. And this is called a consensus, and it's an important part of the Bitcoin system.
All right. So new blocks are added to the chain every 10 minutes. And a block is just a bundle of transactions that have occurred in that 10-minute span, roughly 10 minutes. All of those transactions are then compiled. The new Bitcoins are added as part of that transaction. This kind of gets into the mining. And then the hash of the previous block is included, and a nonce is added, which is just a function which is used for the puzzle solving aspect of mining. So that's just what goes into every block on the blockchain. And before we explain the winning miner that I just mentioned, let me talk about the hash and the nonce. So this is, getting a little bit technical about how blockchain works, but I also think it's important for people to know, because they just hear about, a puzzle is used to mine. What does that mean? We're going to try to just give you a really brief explanation of how that actually works. So a hash and nonce, the hash is a cryptographic process that takes almost any data as input, and it creates a seemingly random output, which is just a string of numbers and letters. So Bitcoin uses what's called the SHA-256 protocol, and that's SHA-256. And you can see this in action for yourself by going to a website. You can just search SHA-256 hash calculator. And I say this because it shows how this works, and it's very interesting. You can put in anything as the input. It can be the word hello, or it can be the entire text of War and Peace, and you get the same type of output, which is just this characters that numbers and letters and characters that total 256 bits. It seems to me it's normally around 65. The string's around 65 characters long, but it's just random. And if you change any aspect of that at all, so you just take out one period, you get an entirely different hash. So that, and the reason I think that's important is the concepts used in this blockchain utilize that for the security purposes. Because if anyone alters anything, like I said, even taking out a period or a space or changing, the letter A to letter B, you get a totally different hash.
Mm-hmm.
And since the blockchain, every block is a hash of the previous block, nothing prior can ever be changed without everyone knowing it. So that's part of the security aspect of the blockchain.
And that's where the cryptocurrency comes from. It's a cryptographic hash, so it's encrypted. It's obviously Brian says you change a period and it completely scrambles. So that's just to let you know, that's where the cryptocurrency.
Yeah, and I find it not. I'm not a cryptologist at all, but I find that very interesting when I first learned it.
Yeah, absolutely.
So talk about the winning miner, Ross.
The winning miner. So, and just let me quickly back up for a second. So if you search for something on Google, just explaining how miners work in this system, if you search for something on Google, they've got a data center that comes in, that transaction or that process, is then fed into their servers, and you almost have like a controller that says, okay, this server takes care of this transaction. Maybe it's a server local to you or close to you, so it's more efficient. So in the Bitcoin network, we have all these miners basically competing for that transaction. So now let me get into that. So the winning miner gets to add the block to the blockchain and gets to claim the new Bitcoins that were added to the block. The hashing that was discussed above is used again for the mining aspect of Bitcoin. The miners use high-powered computers, I mean really high-powered computers, to run programs that change the nonce to try to find a number that solves the required puzzle. Essentially, it means finding a hash output that starts with a particular number of zeros, depending on the level of difficulty, and the difficulty is adjusted every 2 weeks. That on average, that average puzzle is solved in every 10 minutes. So they kind of, adjust the difficulty. So if the, computers are getting faster and faster every day, obviously. So if the average puzzle solved is decreasing, they'll make it harder, and vice versa. So that I think that's a good explanation of why this is needed in the Bitcoin system. They're miners are kind of essentially competing with each other.
Yeah.
To solve that block.
And that's interesting as well, because the solving of the puzzle is finding an output that starts with a certain number of zeros. And I got on one of those websites the other day and tried just changing things here and there, and it took me a long time to even come up with 2 zeros. And I think a lot of times, the puzzle, depending on the difficulty, is 7 or 8 or 9. I don't even know. But anyway.
Yeah, it gets.
And that's why the power is required, because the faster you change that nonce to try to find one that solves it, the better your chances are. And just to touch on another thing you said is the difficulty mining, the difficulty adjustment is a key aspect of Satoshi's whole plan. It encourages people to get back in when the hash rate goes down, when people aren't doing as much. Your chances will go up. Oh, I'm going to get in. So that has had a very profound impact on the success of Bitcoin. Okay, so let's talk reward and the halving. So from 2009, when it started, until November of 2012, the reward was 50 Bitcoins. Fantastic, right? And then in November of 2012,
that's pretty darn good.
It is by today's value. Back then, they weren't worth so much. So again, it shows the genius of the plan. In November of 2012, the first halving occurred, and so the reward was reduced to 25 Bitcoins. The second halving occurred in July of 2016, which lowered the reward to 12.5 Bitcoins. The third halving occurred in May of 2020, so the reward in current, as of this broadcast, is 6.25 Bitcoins. And the next halving is expected to be, it's not an exact time, in the spring of 2024 when it'll go down to 3.125. So right now, the Bitcoin reward in every new block is 6.25 Bitcoins. So let's talk about another important aspect, very important aspect, and that is the supply of Bitcoins.
Yeah.
There will only be a total of 21 million Bitcoins ever released. And it's done, as we said, on this halving schedule. And pursuant to that halving schedule, there's now more than 18 million in circulation. A large number of those have already been lost. So there's already 90% already in circulation. And it's going to continue to be released just by these smaller amounts after each halvening. And so this is how we get to the scarcity aspect of Bitcoin, which is a very important feature.
Oh yeah, and you can say Bitcoin is, deflationary with people, losing their wallets. I think we may mention the Bitcoin, or there's a guy in the news, that lost his Bitcoin wallet password. So, I'm betting he's going to lose whatever's in there at this point.
Right.
But yeah, so now we come to the question. So why own Bitcoin? Well, you can use it for transactions. You can buy things with it. But not a lot because the transaction takes some time to confirm, and its main use is really as a store of value. So that's like gold, but without all the problems with storing and transporting, the physical gold, the actual gold bars. And this is really why it's called the digital gold, because it's, this digital store of value more so.
Yeah.
So.
And that's important. I mean, and let's, to be honest, this is probably a diversion from Satoshi's original vision, because he called it a peer-to-peer cryptocurrency. And it is used, and it can be used. You can buy things with Bitcoin. But as we mentioned, the transaction speed is slow at, 10 minutes, and then maybe even longer if you need multiple confirmations. It's just too slow for a lot of day-to-day transactions. So it's really taken off as a store of value. And what that means is, if you think about why gold is used, why people buy gold, and it's because it tends to hold its value, whereas fiat currency like US dollars or the euro or the yen can lose their value because central banks can and do print more and more of those currencies. And we've seen that here. We're now doing this redo of this podcast after the coronavirus pandemic. And as we know, in response to that, central banks have printed a tremendous amount of new currencies. And that necessarily has the value of devaluing the existing amount of those fiat currencies. So,
oh yeah, and in a way, we're kind of privileged, Brian, to be in the U.S. and have the dollar. But as we know, in other countries, especially Venezuela, I mean, they have some crazy inflationary aspects. I mean, thousands of percent.
Right. You have those countries that are just having tremendous problem with inflation. But now we're seeing, even with the more stable fiat currencies like US dollar and euro, all this unprecedented money printing has occurred. And many people think that's going to have consequences. And those consequences are going to, be inflation and devaluing of those currencies. And Bitcoin is seen as a solution to that. As we said, 90% of all the Bitcoin that will ever exist have already been issued. So you know what you're getting with Bitcoin. It's a capped amount. Fiat currencies have no cap, and there's the attraction for Bitcoin.
Absolutely. So now let's briefly discuss some, as we see, significant developments with respect to Bitcoin. So first one I'd like to mention is there is the Lightning Network. Now, this is not a part of Bitcoin. It is, as we say, a layer 2 network that sits on top of or beside or below of Bitcoin to greatly increase the speed of transactions. And it has its own nodes, its own software, its own network, but it interacts with the main chain of Bitcoin. I don't want to get too into detail on how it works, but in this episode, but it's very high level. At its very high level, it handles very small transactions between two parties off chain, and then writes them onto the main blockchain at a later date. So, as an example, me and Brian, maybe we go on a bro golf trip, and I Venmo Brian for this and that. I bought dinner one night. Me and Brian kind of I already said, I don't know why I said Venmo. That's just in my head right now. But we open up kind of a channel between us to kind of transact between us over the weekend, so we don't have to wait, and write that to the main blockchain. And then at a later date, we kind of bundle all those transactions over our weekend and write that to the main chain. So as you can see, you're probably asking yourself, why is the Lightning Network needed? And it's speed, it's scalability, it helps Bitcoin scale. And just to give it a reference, why this is such a big deal, Bitcoin handles about 7 transactions a second. So that's not very scalable. And you're going to see big delays. In comparison, Visa handles roughly 7,000 transactions a day. So I think the Lightning...
A second, not a day.
Yeah. 7,000 transactions a second every day.
Yeah, there you go.
There we go. Thank you, Brian. But you can see why this is such a big deal, and why I kind of wanted to mention the Lightning Network to, it's something on top that helps Bitcoin scale and helps with that scalability, speed of transaction.
Yeah, no, that was definitely worth mentioning. We don't want to leave the impression that Bitcoin is not usable because of the slowness of transactions. So that was worth. Another upgrade I want to mention, Ross, it hasn't happened yet, but it looks like it will when we're recording this. It'll be a soft fork called Taproot. And like I said, it hadn't passed yet, because passing a soft forks, a change like that, is very difficult. I make the analogy to passing a constitutional amendment in the U.S.
Yeah,
you don't make it easy because you want it to be a rare thing, and it is. So it's intentionally very difficult. But if Taproot passes, it will be the first significant upgrade since SegWit in August of 2017. SegWit allowed for an increased block capacity of Bitcoin. Mm-hmm. And if it's implemented, it will only alter 2 lines of the Bitcoin code, but it will allow a new signature scheme, which will allow basic smart contract function, and to allow for more privacy. Now, it's not going to be a smart contract competitor to Ethereum or Cardano or EOS or any of those, but it will give a little bit more functionality to Bitcoin. And so a lot of people are excited about that.
Yeah, and just to piggyback off you for a second, Brian, anytime you hear the word forks, that being soft fork or hard fork, just think of a change in the code. And that, forks can happen on, other coins as well. But anytime you hear fork, it's just a change in the software, as Brian fully mentioned with Taproot.
All right. So maybe we go back to the basics and tell people how they buy it. How do you buy Bitcoin?
Yeah. That's a huge thing now. You're just like, wow, Ross and Brian, you've sold me. This sounds cool. How do I get my hands on some Bitcoins? So the first thing you need to do is get set up on an exchange. And, just a fair warning, this involves verifying your identity. So sometimes you have to take a picture of your passport or your driver's license. But this is part of that know your customer aspect. So, you can report your taxes and not hide from the government.
And same as opening a bank account.
Exactly, yeah. Opening a bank account, dealing with stocks, you're going to go through the same thing. But yeah, and then the next part is linking your bank account to this exchange. And just to back up for a second, verifying your identity can take some time. I've seen some friends, that say they've been waiting a week to verify their identity for an exchange. So just a fair warning. But the next part is linking your bank account. So, a way for you to put your US dollars, your cash, whatever your local currency is, onto the exchange. So once you link your bank account, you load it onto the exchange, and then you exchange that currency for Bitcoin. And from there, you can exchange from other currencies as well. But from there, if the exchange allows you to have your own wallet, which most do, you can you can send and transact with other, users or other wallets, essentially. So I can send my Bitcoins from my wallet to Brian's wallet. And when you hear wallet, it's essentially your Bitcoin account. I think that's a good summary of it. Oh yes, this is a key point I want to make. When you're getting on the exchange and setting up your wallet, you will get a secure or secret phrase. You want to make sure you write that down because the exchange doesn't save it. No one else saves it. If you lose your secret phrase, your secret password, you're out of luck. Your wallet is gone and you will lose everything. So that's just a fair warning there.
Yeah, but let's distinguish. So I don't. When you open an account, let's say on Coinbase, you don't get a secret phrase. It's only when you want to take the whatever you bought from Coinbase and want to put it in your own wallet, and then for that wallet that you have to do the secret phrase.
Absolutely, yes. Okay. It's not just you setting up the exchange. When you have an exchange that allows you to have your own wallet and you're setting up your wallet. Yeah, you have to write that down. So thank you for that, Brian.
Yeah. No, I just didn't want anybody to say, "Oh, I set up an account, didn't have to do a secret phrase." That's when you do your own wallet where you can take it off the exchange.
Yeah, your password for the exchange to log on there. If you lose that, you'll be able to log back in. You call customer support. So
there you go.
Thank you for that distinction here.
All right. So name a few of the common ones in case somebody just wants to know, well, where should I go?
Oh yeah. So there's a lot of places to buy Bitcoin. Right now, the main ones, just to name a few: Coinbase, eToro, Gemini, BlockFi, Kraken, Robinhood, Crypto.com, Binance, and even now you can buy it on PayPal and Venmo. But really, if you're on a crypto exchange, they're going to have Bitcoin for you to buy. That is the number one.
They all have Bitcoin.
Yes.
You don't have to worry about that. We talk about this every show because on some other crypto assets, it's not as easy. They don't all exchanges don't have all crypto assets on them, but they do all have Bitcoin. I've never seen one without Bitcoin.
Exactly.
So bottom line is, if you find an exchange that you can get on, it will have a Bitcoin. Not just FYI to American citizens, we can't get on all exchanges, but there are plenty of exchanges we can get on. And the ones Ross just mentioned, some of the big ones are Coinbase and Kraken and Gemini. So U.S. citizens can get on that. Binance is a huge exchange, but U.S. citizens are not allowed on that, although they do have a Binance U.S., which is a different exchange, but it doesn't have as many currencies. But that's, anyways, easy to buy Bitcoin if you get it on exchange.
Absolutely.
All right. So we normally we go to final thoughts on all of our crypto assets. On this one, it's Bitcoin. It's numero uno. It's the big one.
Yeah.
We'll keep it very brief. I'll speak for myself, and you can say the same, Ross. So my final thoughts are: yes, I own Bitcoin. I own a lot of Bitcoin by my standards, I guess. I found a way to get some for my retirement account. I'm a believer in Bitcoin. It's like we said, we're having these problems with fiat currency, with all the money printing. Bitcoin is the best store of value, in my opinion, even though there is some, the prices go up and down. No question about that. But I think it's superior to gold. I think in the long run, it'll do better than gold. So, I am into Bitcoin.
Oh, absolutely. I mean, there's no question about it. We were both very into Bitcoin. I own some as well. And we'll talk about this too, kind of the tokenomic aspects of Bitcoin and other crypto assets. But it's got that limited supply. It's deflationary in nature. And it's decentralized. I think that it checks all the boxes for me. Those are the ones I like to see when looking at other crypto assets. And yeah, Bitcoin is the digital gold in my eyes.
It is. Now, that being said, it's not the only crypto asset that I would hold or that I would recommend. I think it serves its function very well as a store of value. But there are other crypto assets, see our other podcasts that do a lot of different other things that Bitcoin can't do, isn't designed to do, doesn't want to do. So even though Bitcoin is definitely something we own, it's not the only one.
Absolutely. There's more to cryptocurrency than just a store of value.
And on that note, check out our other podcasts, and we will wrap up episode 1 redo. We're the Crypto Masters.
Thanks, everyone.
Thanks, everybody.